Can Apple and Amazon weather the storm of a new trade policy? Investors are eager to find out. On May 1, 2025, these tech giants will reveal their first quarter earnings reports. The reports are crucial. They will offer a glimpse into the health of these companies amidst global economic uncertainty. The stakes are high. Apple and Amazon are not just companies, they are bellwethers of the tech industry and the broader economy. Their performance can influence market sentiment and investor confidence. All eyes will be on these earnings calls. For Apple, iPhone sales are always a key metric. Investors want to see if the iconic smartphone can continue its growth trajectory. Services revenue is another important area to watch. Apple is increasingly relying on services like Apple Music and iCloud for growth. Performance in China, a crucial market for Apple, will also be under scrutiny. Apple's guidance for the second quarter will be closely analyzed. This forward-looking outlook will reveal how the company views the potential impact of the trade policy. Analysts are expecting modest growth for Apple. They project earnings per share of around $1.60 and revenue of approximately $94.4 billion. Amazon's earnings will be closely watched for different reasons. E-commerce growth is paramount. Investors want to know if the online retail giant can maintain its dominance in the face of potential trade headwinds. AWS, Amazon's cloud computing division, is a powerhouse. Its revenue growth and operating margin will be key indicators of its continued success. Advertising revenue is another area where Amazon has been making strides. Investors will be looking for continued growth in this segment. Amazon's guidance for the second quarter will be crucial. It will provide insights into the company's expectations for profitability and the overall impact of the trade policy. Analysts anticipate continued growth for Amazon, with revenue projected between $151 billion and $155.5 billion, and earnings per share expected to fall between $1.12 and $1.37. Section 4. The new trade order. The global trade landscape is shifting. A new trade policy has introduced uncertainty into the market. This policy includes increased tariffs on goods imported from China. These tariffs could reach as high as 145%. Additionally, a baseline tariff of 10% has been imposed on many products from other countries. This policy has significant implications for global businesses, particularly those with complex supply chains. Companies like Apple and Amazon, which rely heavily on global trade, are now navigating a more complex and potentially costly trading environment. The impact of these tariffs is likely to be felt across industries and could contribute to rising prices for consumers. Section 5. Apple's supply chain in the crosshairs. Apple's supply chain is heavily reliant on China. Approximately 90% of Apple's products are manufactured in China. This reliance makes Apple particularly vulnerable to disruptions caused by the new trade policy. The tariffs could lead to increased manufacturing costs for Apple. These increased costs could squeeze Apple's profit margins. Furthermore, the trade policy could disrupt Apple's carefully calibrated supply chain. Delays in shipments and increased shipping costs are also potential challenges. These disruptions could impact Apple's ability to meet demand for its products, potentially affecting sales. Section 6. Amazon navigates the tariff storm. Amazon also faces challenges from the new trade policy. The company's e-commerce business, which relies heavily on Chinese imports, could be significantly impacted. Tariffs on Chinese goods could lead to higher prices for consumers, potentially dampening demand. Amazon's international sales could also suffer as tariffs and retaliatory measures take effect. However, Amazon's cloud computing division, AWS, is expected to be more resilient to these trade headwinds. AWS operates in a different market and is less reliant on physical goods. Section 7. Investing in the age of uncertainty. Despite the challenges posed by the new trade policy, Apple and Amazon remain compelling investments for many. Apple's brand loyalty is unmatched in the tech industry. Consumers are willing to pay a premium for Apple products. This loyalty gives Apple some pricing power, even in the face of rising costs. Amazon, on the other hand, has established itself as the dominant force in e-commerce and cloud computing. The company's vast scale and logistical prowess give it a significant competitive advantage. Both Apple and Amazon are actively diversifying their supply chains. Apple is increasingly looking to countries like India and Vietnam for manufacturing. Amazon is expanding its global fulfillment network. These diversification efforts could mitigate the impact of the trade policy in the long run. Despite the current uncertainty, Apple and Amazon remain innovative companies with strong track records of growth. Investors, however, should remain vigilant. The trade landscape is constantly evolving. The impact of the new trade policy is still unfolding. It is more important than ever for investors to conduct thorough research and stay informed about the latest developments.